emergency pod, JD Vance, our future vice president and president. Oh my God. To discuss that as well as government intervention into strategic markets and super cool stuff like a strategic resilience reserve, we have on today Arnab Datta, one of the architects of the Strategic Petroleum Reserve reform and the director of policy implementation at the think tank Employ America. Co-hosting today, Matt Klein, who writes the excellent Overshoot newsletter. Matt, JD Vance in economics, kick us off.
Okay.
I hear he's read your book.
Yes, that's right. And in fact, you can see in things like when he asked Jerome Powell, the chairman of the Federal Reserve Board, questions about why the dollar should be the reserve currency, why we would want it to be a reserve currency. If it's a problem that foreigners like using the dollar, that is, I think, indicative of the fact that he and his team have read and absorbed at least some of the points in the book that I wrote with Michael Pettis a couple of years ago, Trade Wars or Class Wars. That's right. The argument basically being that it's our currency, and the U.S. economy is a large economy globally, but the use of the dollar vastly exceeds the size of the U.S. economy. And so for an economy that's, between 20 and 25% of the world, but that has a currency and financial system that meets the needs of, 80% of the world, it's obviously going to lead to some really big mismatches between what makes sense for global savers and investors versus what makes sense for Americans. And so there's an argument to be made that you want to break that link, that you want to have the dollar really being just used by Americans mostly, and have the U.S. financial system focus on what makes sense for Americans and not focusing on creating assets for foreigners. That's an argument that Michael and I made in our book. It seems like something that Vance is interested in, and has expressed in the past and more recently as well.
So, I guess two questions. Like, if a president wants to devalue the dollar and take America, make sure that the U.S. is not the global reserve currency. Let's start with how practically a president would go about trying to realize that.
So, well, it would help to have legislation. You could do things without it, but I mean, basically, you want to make it less. You want to make U.S. assets less accessible and less attractive for foreigners. Is one way. Now, obviously, there are lots of ways to do that, right? You could very arbitrarily enforce the rule of law, use sanctions, confiscate. I mean, there are a lot of countries that have real trouble attracting foreign investment that do this all the time without, thinking about exorbitant burden or anything like that. So there's clearly a playbook there. Maybe one that, the Trump administration would find attractive. There are things you can do as well. There's actually legislation that was proposed, 5-6 years ago. It was bipartisan legislation. I have no idea what the situation is now. I haven't heard anything about it more recently, but basically the deal was that you would give the Federal Reserve the authority to impose a tax on any foreign purchase of U.S. assets. And so it doesn't matter whether it's, a foreigner wanting to open a bank account in the U.S. or you want to buy like a U.S. stock or something from whatever house, you put a tax. And basically they could adjust the tax based on their judgment of what foreign demand for U.S. assets was in order to sort of balance financial inflows and outflows. That was one, that kind of tool would be helpful. You could also have something like what a lot of other countries do. If you want to lower the value of exchange rate, you have your central bank buy foreign assets. You create dollars, you buy something else. So, for example, the Swiss National Bank has bought a lot of dollars and euros, including stocks and other things, because but lots of, they create Swiss francs, and that they'll use that to manage exchange rate. And then more recently, they've been selling, but that gives them a tool to manage exchange rate. Singapore does this. In fact, Singapore, the central bank, the monetary authority of Singapore, they don't set interest rates the way a lot of big central banks do. They just say we're going to target the exchange rate, and then they let interest rates move accordingly based on that. There are a lot of other, ways of going about it, but there's no inherent reason why you couldn't have the Fed do that. You'd have to, again, it probably would help to have some kind of legislation to tell them to do that, but I mean, it's not exactly unorthodox. Those are kind of the main things that would work.
All right, so I am skeptical that Trump himself will get over the idea of a strong dollar being a bad thing. But say he makes that intellectual leap and Vance gets his way.
Just got to change the word. It's not strong. It's expensive. It's overpriced. It's overpriced. It's not a good deal. It's not a good deal.
What would that do to the economy? So, or the global economy. Global and American economy.
Okay, so we'll start with the U.S. economy because that's arguably simpler. So in general, right, there's every currency, there's always exchange rates, right? It's just a question of the prices in your country versus the prices in another country, and those exchange rates balance in different ways, whether it's more attractive to buy stuff that's made in one place versus another place. And so if you change those relative prices, what should happen is that if you make the dollar less expensive, lower its value relative to other currencies, then people in America should find things made in the US relatively cheaper and more affordable than things made outside the US. And people outside the US should find things made in the US more affordable than things made outside the US. And so what that should do is that should mean that there's more buying of US made stuff and less American buying of non-US stuff. That's what should happen. That's the very first order effect. Now, there are then some reasonable second order effects you could expect to happen. One would be that to the extent that American companies are exporting things, they should, generate more, they can sell more things abroad because the prices are better. That should increase their profits. That might increase investment in hiring in export industries. The flip side being that if you're in a business that is importing things to the US, you're going to do relatively less well, potentially. So there's a transfer internally within the US economy from that perspective. There's also, abroad, there's transfers, right? If you're a company that competes globally with US companies globally, you're going to potentially lose out relative to those companies. So maybe not. So this is not how necessarily airplane pricing works. But if you'd imagine like Airbus and Boeing, right? It's sort of an example of two companies and two currency zones that export globally. And again, they don't necessarily price these things in US dollars. So it's not a perfect example, but like that would be the kind of thing. Like one would lose and one would gain. That's one approach. A corollary of if you have more investment in hiring and production in the US in response to a weaker dollar, you can expect and higher prices for imports. That should be on the margin a kind of inflationary impulse, which sometimes would be a welcome thing. You've seen the Bank of Japan being very big in intervening in the currency markets in the past, and the Swiss National Bank explicitly, and the Swedish central bank explicitly for the purpose of saying our inflation is too low. We want inflation to go up, so we're going to push the currency down to generate inflation. That's not what people are saying now for the U.S., but that is generally the kind of thing you would expect to happen in general. These are sort of the normal textbook effects. The actual impact could be a lot more complex. There are lots of places that when they do currency interventions, they do other things at the same time to sort of mitigate some of those effects. China is a very good example of this. They'll manage the exchange rate one way, but then they will, the sterilization is the technical term often that's used to describe this. This sort of offsets some of the impact, so it doesn't necessarily generate the kind of inflation you'd expect, or other corollary effects. I don't think that's necessarily what you'd see in the U.S. based on the kinds of things people have said, but I mean these are kinds of some of the effects that you could expect.
What are our first and second order global
so partly depends on how the magnitudes we're talking about, right? So I mean, like a 10% move, 20% move, like honestly that's not that out of the ordinary for like just if you just look at a chart of exchange rates, like things that can happen over a multi-year span. That's not, people deal with that. You're talking about something bigger, then it depends. But then there's kind of funny, there's a lot of research that economists have published on this over the years, and it seems to be like, well, the dollar goes up, then it's bad for emerging markets. The dollar goes down, it's bad for emerging markets. So people don't really there doesn't seem to be like a real consensus there. Like if it goes up, the argument, the dollar becomes more expensive, then that tightens financial conditions, because the U.S. financial system plays such an outsized role in the global economy and the intermediation of savings and investment outside the United States, then it becomes harder to borrow things, and there's less investment in production outside the U.S. So like you could have a situation where like a tie factory is not going to suddenly be putting up more capacity for building semiconductor testing or cars or whatever because the dollar is expensive. I mean, that's like one theory. There's another theory, which is that the dollar goes down, then that's bad because it hurts the exports. And so again, the tie factory is not going to be making as much money because the Thai baht is appreciated relative to the dollar, and so that's bad. So you can have arguments going either way. I don't really know if anyone's going to sort of systematically figure out what the net impact is. I think it depends on the context. There are also arguments that it literally doesn't matter because all these international trade is invoiced in dollars anyway, and so the actual change in the value of the dollar doesn't matter. I'm not sure I buy that one, because again, like sooner or later, someone is turning at those dollars into their local currency for profits to pay their owners, and that you do see impact there, but. So what it means globally is tricky, especially if we're talking about like a massive move. If we're talking about a really massive move, then that could be potentially more interesting because it might lead to things of like, well, people are going to sell assets. Does that lead to, higher U.S. interest rates because of that? Or like there are other potential factors there. But those are the kinds of things. Usually you don't see currencies move just for their own reason. Usually they move in response to something else, like a big move. In the financial crisis, for example, the big dollar appreciation because it wasn't because like someone decided we want to make the dollar more expensive. It's because a lot of people owed a lot of money in dollars. I had to pay it up all at once. That kind of thing. And so this kind of situation, we haven't really quite tested it before.
Let's talk tariffs. Matt, what's also sort of book inspired? I don't even.
No, not really. I mean, we actually wrote about how a lot of arguments about tariffs don't really make sense a lot of the time because, in a world of floating exchange rates, what you'd expect is that the currency would move to offset an impact of a tariff. Maybe it doesn't quite work that way, but the general assumption would be if you put a tariff so that prices in the U.S. are higher than outside the U.S., then people are just going to say, okay, we're going to invest more in building stuff in the U.S. And then, which is, arguably a good thing if you want more investment in the U.S., but in terms of what the impact is in the trade balance, like you need to import stuff to make that extra investment and capital spend in the U.S. And so the net effect could be nothing, right? I mean, the standard argument, the textbook argument is that tariffs actually penalize your exporters because you're going to import just as much anyway, but then your exchange rate goes up, and so your exports become less competitive. There are probably a lot of reasons why that doesn't necessarily work out, and it also depends on to the extent that tariffs are tax increases. If those tax increases are purely just a tax increase and the government budget tightens, you would expect in that case that would reduce spending by Americans because they have less money, and so that would reduce the trade deficit. But it does it in a way by making us poorer, so that's not really good either. So if you look at what some people in the Trump administration are saying about what they're going to do with tariff revenue, it's to offset tax cuts elsewhere. So the net effect is a lot trickier. I don't think it's really hard to. I think it is hard to say what the net effect would be.
All right, let's talk industrial policy.
I don't know.
Yeah. I mean, I think, I've worked with his office a lot on some initiatives, and I think he is thoughtful, I think, and diverges from a lot of the orthodoxy on the Republican Party, particularly on spending. Like, I think he is someone who is willing to put money behind investments in strategic sectors. The question I guess I have going forward is like, how much does he actually define that conversation in a future Trump administration? Because I think there is, even on areas where there is bipartisan consensus that something needs to be done and something should be supported. Let's take an industry like next-gen geothermal industry, right? Energy, which is something that is bipartisan coded, has like a lot of Republican senators who are supportive of, supporting this burgeoning industry, but they don't want to spend any money. And I'd be curious how, future Vice President Vance can influence some of the thinking on those conversations.
So he did vote for the CHIPS Act when he's been talking about it in the past. It was sort of this like isolationist coded thing. It's like, we don't want to have to care about Taiwan was like the like the energy of his support behind it. But he does have this like bias towards, it's almost like she-esque like bias towards like manufacturing as like the only part of the economy that's like real and matters. Which is, sort of interesting from someone who came from the Valley, but like, whatever, God bless him.
He didn't come from the Valley. He came from Ohio.
Well, yeah, whatever. Was repulsed
the hill, then
by
the Valley,
I guess. Oh God. Arnab, let's do a little like vibe.
Yeah.
No, one thing I was just gonna add is like he does have I'm always like a little curious about what he actually thinks, because he does have this tendency to look for the most like partisan kind of like fighting aspect of some issue. And I think the semiconductor example you just used, and like we don't want to protect Taiwan, is like one version of it. The other version is like housing price. Like, we need to do something about housing prices because all these immigrants are like driving up housing prices, which has like no evidence and is like a nonsense argument. But housing prices are high, and like we should do something about them. And so I'm never quite sure how to like evaluate those things.
I don't know. It's just this like, look, he's like been playing a game really aggressively for the past 8 years. And, we've done a lot of Shakespeare emergency episodes over the past few months. And it's, the whole knowing yourself question of, once clearly there's an aspect of him that could be an Employ America, staffer, right? Like he's like very much in the weeds. He's clearly very smart and thoughtful in a way, we haven't had in a long time in the executive. I mean, I guess you sort of have Obama and Clinton as like versions of this, but he's another one of these like serious intellectual thinker people. But he has also been able to put on the clothes of some guy who like does great on Tucker Carlson, and he's been completely inhabiting that role for a number of years now. And like, does that end now? Does it? I mean, is it in his marrow at this point? I think is something we'll all learn if Trump wins over the next few years. Arnab, I'm curious. Oh, Matt, you wanted to jump in on the atmospherics?
Oh no, it's not Shakespeare, but in Man for All Seasons, there's a line that you've reminded me of, which is, "But for whales." It's basically, you're giving up all of your principles for a little bit of power, and then okay, but like what? You get to become like the Lord of, the Bishop of Wales or something like that. That's what Thomas More says to him. But for whales. But
there is one question I would like to ask the witness. That's a chain of office you're wearing. May I see it? The Red Dragon. What's this?
Sir Richard is appointed Attorney General for Wales.
For Wales. Why, Richard, it profits a man nothing to give his soul for the whole world. But for Wales.
But yeah, this is the difference, right? Is like, he's like, he's got as good a chance as anyone of like being president now, right? Not just from if Trump dies perspective, but running in 4 or 8 years. Your Faustian bargain here is like has a potential to have a pretty high payout for you from a just like a power acquisition perspective. Arnab, there's been some reporting about how all the staffers are like really tall and smoke a lot. Can we get like a vibe check on the like broader energy of the JD Vance universe?
That is not something I have experienced. The folks that I know from his world are average height, and as far as I know, don't smoke. But I don't hang out with them enough to know that for sure, I guess.
Okay, so no zins in the office. Fair enough.
I think
or
that's
maybe
as
no
much a
zins
vibe
around
as
Arnab.
Yeah, that might just be a vibe as much as anything.
Okay. The one thing I'll say, interesting discovery in my aggressive Googling over the past 48 hours. His wife spent a year in China after college as a Yale China fellow teaching at Sun Yat-sen University. So what does that mean? Like, probably nothing, but like,
I mean, Matt Pottinger spent a long time in China too, so.
Fair.
My big takeaway from this is Yale Law School just keeps winning, controlling the country every other way.
It's we're gonna have Amy Chua on the podcast coming up.
She's gonna be. I guess she's too old to go on the Supreme Court, but that would be an interesting nomination.
Woo!
Wow.
Woo. I don't know. I mean,
is she? How old is she?
I think she's 60. I mean, she's old enough that someone who really were being aggressive would probably
61. Yeah, that's not gonna cut it. The other sort of like Shakespeare thing is, I got a feeling like, again, like the but for whales thing, like if he starts trying to have agency and like push Trump in a it's been interesting reading the sort of coverage of how he got it. And, one of the interesting things is like everyone wants to have this like really tight relationship with Trump and like ask him for favors all the time. And like, it seems like Vance was very strategic about this. And he literally only asked him, he like didn't even ask him for him to endorse him. And like the only thing he asked for some support on was like endorsing this like transportation safety bill or something. And if and when, Vance is sitting in the White House and like thinks it's like, this is my time to do something and push a thing. I wonder, like, I think there's like a not insignificant chance that Trump ends up, seeing his own mortality and like becoming very threatened by this person who, obviously has like designs on the throne at some point. And I wonder just how much that dynamic may get a lot more complicated than it is now, of this sort of like, mentor protege thing into something a little more contentious and dark.
Yeah, it's hard to
No?
imagine. I just can't imagine Trump. I'm just thinking about Trump in a mentor relationship, and that sounds not great.
Well, it's the thing, right? It's like he's like,
Like, is he
I
gonna
mean, he's
get
got
annoyed
these.
when Vance gets some good press or something like that? Like, it just and like try to try to cut him down a little bit. I don't know.
Well, it's just like if he starts pushing things Trump doesn't want to be pushed, right?
Yeah.
And then all of a sudden he goes from this like surrogate son to like a someone who's trying to like do unpopular things that are obnoxious. Matt, can you talk about this better than I can?
I'm just surprised that someone who's gone as far as he has and talking about January 6th and so forth would bother to push Trump in a place that Trump wouldn't want to go anyway.
Yeah.
Is
So
probably-
he's
but
he's still gonna hide his talents and bide his time.
I mean, or
That's the
there's
base case.
there's nothing to hide, right? I mean, that's
Yeah.
like, it's just, this is, I don't know. I mean, I think he's been very clear over the past few years about what he thinks about, constitutional government and what, he think, what his responsibility as a senator and so forth. So I don't think there's really any,
Well, that's cool. You know what's cooler? Critical minerals and stockpiling them or buying and selling them in smart ways. Arnab, let's do a bit of a backstory of the first kind of big push in, starting from the mid 20th century of America doing this. The Strategic Petroleum Reserve. What is it, and how has it evolved over time?
Yeah, so thanks again for opening this up. But the Strategic Petroleum Reserve was established in the mid '70s, basically in wake of the Arab oil embargo that came out of the Yom Kippur War. And essentially, we realized we were, as net importers of crude oil, we were very vulnerable to these types of shocks. And we established a reserve, which is essentially a set of salt caverns that are like dotted all over the Gulf Coast that could store crude oil for us. At the same time that this was happening, the International Energy Agency was established, and they have, all the members are required to keep in reserves about 25 days of export capability in their reserves. So you had this big push to store crude in the event of a vulnerability like that. And since that time, we built it up. I think at max capacity, we probably had about 650, 700 million barrels of oil in there. But it hasn't been utilized quite extensively, I would say, over time. There's been a couple of geopolitical disruptions where oil was released from the SPR. The civil war in Libya in the 2010-11 period is one example. We've used it in response to natural disasters like hurricanes and things like that here. But it hasn't really been utilized extensively. And one thing particularly I would add is when it was established, people think about it as this asset of, oil sitting in a reserve that we can release. But the SPR was created with a whole other, part of its mandate to basically boost our industry here. If you look at the acquisition authority specifically, there's a number of goals that are outlined in that include maximizing domestic oil production, promoting competition, and it hasn't really been utilized to its full extent, I would say.
Talk a little bit about how sort of domestic oil production changed the whole point of this thing, and what what you guys have been pushing in the wake of the invasion of Ukraine.
So basically, as I said, the SPR was designed when we were net importers of crude. But in the period since the SPR was established, I think a couple of big things have happened. One, we became net exporters of crude, and we're now the number one oil producer with the shale revolution happening. I think second, as we've become this huge exporter, our vulnerabilities have kind of shown in other places. So refining capacity is one. We haven't built a new large kind of capacity over 100,000 barrels per day refiner since 1977. There's one that's been announced recently from this company, Element Fuel Holdings, which is trying to establish to build one in Texas. But that's like a thing where our vulnerability is no longer really in crude oil. A second thing that's happened in that period as well is financialization. The WTI contract, the Brent crude contracts, these were established in the 80s, and they've really made them, transform the market in a couple of pretty dramatic ways. They've made it easier for producers to hedge, to attract more financing. They've created this mechanism for, the bottom of the market to hit less quickly in the event of a supply glut, or the top to be a bit slower in the event of a shortage. And I think more broadly, there's a transparent market with important pricing information, investment information that's available to a lot of people. And so in the wake of that, we had been, just give a bit of background, Employ America is an organization that's committed to full employment and basically macroeconomic policy that leads to that. And coming out of the COVID pandemic and recession, we'd started to get really worried about the prospect of a crude oil shock and what it would mean for inflation and for potential recession. And so we had been, looking at investment patterns in the shale patch, basically, seeing investment drop off, and we were worried that prices would go really high. We started to explore different authorities that we could use to basically boost domestic oil production in the short term and minimize some of that price pressure. And the thing that we really zeroed in on was the SPR, and start to look at whether you could use contracting authorities, acquisition authorities at the SPR to provide producers with the certainty they needed to go and produce. One thing that we saw coming out of the shale revolution, particularly in the late 2010s, is that because prices went down and you had a whole host of bankruptcies among shale producers, in each successive price increase, investments started to become less sensitive to price increases. And so even as prices coming out of the Russian invasion of Ukraine hit 130, we didn't really see a huge investment response. And we started to look at why that is. And you heard oil CEOs talking about this, they had, billions of losses over the previous decade that they needed to make up, and they couldn't justify investment to their shareholders if this was going to be just a momentary blip. And so we needed some mechanism, essentially, to get at that capital discipline problem.
There's another thing, too, which relates to what you were saying, which is, I believe is in around the time of the CARES Act. Maybe it was originally something that might have gone in the CARES Act, but when oil prices went extremely low, in fact, WTI went negative, there was actually a proposal to refill the SPR specifically to essentially bail out American oil producers. That did not happen, which probably exacerbated the the supply shock problem, a year or two later.
Yeah, I think it shows you how kind of short-sighted politicians can be on this stuff, because there's we're not going to give a bailout to oil companies, but that's, they ended up profiting off of that in the end. And, it was a conversation around the CARES Act. There was even a solicitation that was issued by the Department of Energy that was later rescinded because they didn't have the money to do it, because they didn't get any money out of the CARES Act. So,
Arnab, I have a question for you, because I know you've looked at a lot of this, and you were mentioning about how sometimes the squeeze is not so much on crude oil, but in refined products. And I know a lot of the work that Employ America has published is about using the SPR for managing crude, but is there a capacity with the existing legislation for the SPR to also, stockpile and trade and refined products as well, and deal with those potential issues? And I mean, I know refinery capacity has gone down even just since, 2019, and you're saying maybe it'll go up again, but I mean, is there a way to address that leg as well?
I mean, it depends on how creative you want to be with it, with an authority. Unfortunately, like at the SPR, there isn't. That's really oriented around crude oil. We do have smaller kind of refined product reserves. They're not utilized in the same sense. There's storage, storage issues that come with storing refined products. One thing that we had proposed, and a lot of this is oriented around how aggressive a case you're willing to make that oil price instability, both for refined products and for crude, affects exchange rate stability. And so we made the case that this is something worth taking seriously, and accordingly that the exchange stabilization fund at Treasury should be utilized for this purpose. Now that's not something that, it's typically seen as outside of the scope of some of the folks at Treasury. And, I understand their concerns, but, outside of some of those authorities, it's difficult to do this.
So just to ask a technical question, I don't mean to step on your toes, Jordan, but you mentioned the storage issues. I mean, is it a situation where refined products just literally would not be suitable to put in the salt caverns that the SPR has? Or is there some other...
they degrade differently. I mean, we could build it, to be clear, but refined products can be stored. They degrade, outside like very, very specific conditions, they degrade much more quickly. That's one reason why we store crude. You could build it if you invested in it, but it would be costly.
But it's not something we have now, basically.
Yeah, exactly.
Okay, so why don't you talk through the tension of working on this and pushing forward climate goals as well?
Sure. Yeah. So, I think we're not a climate-oriented organization, but we're certainly, at least personally, folks who care about decarbonization. I think the thing that we really made in our public case here, and I credit both my colleague Skanda, who is really one of the key engines for all of this work, but also my colleague Alex Williams for making the public case that this is important from a climate perspective, because when you think about the energy transition, the price volatility of crude oil is as much of a challenge as crude oil itself. There's a tendency, I think, among folks a lot of folks who care about climate to just, particularly on the further left, to, engage in the kind of keep it in the ground and that type of rhetoric. And I think it, both misses the fact that like people need oil. Like this is not something that's going away overnight. And we need to think about how are we managing that transition stably and making sure that EVs, for example, are price competitive with ICEs. And as an example, one thing that this type of flexible contracting that, we'll talk about a little bit more allows you to do is it allows you essentially to set a soft floor on prices as well. Because we don't want prices to go to $40 again, where EVs become less price competitive relatively than ICEs. And so in that context, if you think about, decarbonization as an industrial policy planning challenge, making sure that the levers of price stability over time, making sure that levers of policy are being utilized towards price stability over time is important.
I'm curious, Arnab, in your sense, and I don't know if you've looked at this in like other countries, but obviously China is another very large oil consumer. They're much less transparent about what they do, but they also do have very large strategic reserves and seem to use them actively to manage prices. I'm curious, like, what your sense is of how that works, and if you learned anything from that, or how you think about that experience.
I think I have looked into it, and I have some like commodities friends who are very interested in this, and they share data when they can find it, which, as you said, is not easy. I think, generally, like when I see some big development, that they've started purchasing a lot, I try to just think about it in the context of what it means for prices going forward and whether we've got enough supply coming on. I haven't gotten, there's been times where some action has happened where they started, purchasing and storing a bunch of refined product, let's say. And some folks are wondering, like, well, what are they gearing up for? What does this mean? There's always like a worry about what that might mean. I just can't get a sense of their motivations from that. So I really try to look at what it means in the broader picture for the supply demand picture. Jordan, one thing sorry to pause. I realize I didn't say like exactly kind of what the contracting change is. Is it worth getting into that a little bit?
Great. Let's come back to the legislation. Like what is the actual contracting change?
Cool. Yeah, so put simply, the DOE can now utilize forward fixed price contracts when it's acquiring oil for the Strategic Petroleum Reserve. So in the past, prior to this rule change that happened at the tail end of 2022, 2023, the regulation for acquisition basically read that when acquiring oil for the SPR, DOE shall use a price index to account for fluctuations in market prices at the time between the time of contracting and to the time of delivery. And so, like, what does this mean in practice? If I am DOE and I write a solicitation for 1 million barrels of oil 9 months from now, the clearing price at delivery is not pre-contracted for. It's based on the spot price of oil at that time. And what that means is if you're a producer, if prices go up in that period, like, great, you've earned a little bit more money. But if prices go down, you're at a loss. And at the time that this practice was established, it wasn't necessarily a bad thing. In some ways, it made sense. It was before a futures market. But now, particularly in the context of sending an investment signal, which is one reason why the DOE undertook this change, you want certainty. That's the thing that producers need. They need certainty, particularly at the floor, that they're going to be able to get a certain price. And so the big change that DOE made in this regulation was just changing that single sentence from a shall to a may. So they can still do the market index pricing, but they've started to use fixed price forward contracts, which they've been engaging for the better part of a year now.
As you know, the type of oil that's produced in the U.S. by shale producers is meaningfully different from the type of oil that historically the U.S. has imported and put in the caverns. Does the SPR like make allowances for this? And I mean, things like the sulfur content and the viscosity and stuff. Like, I mean, do they make allowances for this? Are they aiming to specifically say we want to support the U.S. shale industry by stockpiling, the light sweet versus the heavy sour? Or I mean, how is that process unfolding?
It's a great question, Matt, and one I'm very happy to answer. So unfortunately, they don't. Like right now, their solicitations are all in sour crude. Now, there's, again, a good reason for that. One is that's what they have storage capacity for in the SPR. They do take sweet and they have stored it, but it can't be commingled from what I understand. And so you basically need to keep the sour with the sour, and that's where the capacity is right now. The other reason, though, that they tend to prefer to purchase sour is because our refining capacity is much more oriented towards sour. And I think that's like a challenge that we still have to work through, frankly, in the context of this policy as we think about it as a long-term execution thing, which is that, the shale, if we're thinking about incentivizing domestic investment, we're really thinking about the shale patch because that has the shortest investment cycle. 9 to 12 months, basically, they can start to ramp up. But if you can't purchase, sweet and then put it into the SPR, like we need to think about how can we, maybe reorient some of our SPR existing caverns, what's in our existing caverns towards the sweet so that we can use it more as an investment signal that way.
I guess the other possibility, I don't know, you mentioned you're from Canada. What the thing there? I mean, the tar sand oil is, my understanding is it's very sour, right? And I guess, is there a possibility of doing some kind of cooperative, arrangement with the authorities there to say like, well, you have the really sour stuff, we got the sweet stuff, we can make some, blend it, right? I mean, something like that, right? I mean, there are pipelines, there's ways of, I mean, has there been discussions there, or
I think it's a great point. It's something like I would certainly like to see. I think that there are authorities and ways that you could do this. Like you could utilize the exchange authority which basically allows you to swap out oil, crude from the caverns. I think there are ways to do that. Whether it's possible technically, I think the people who manage the SPR are really the only ones who know that. But it's a broader point, I think, that's really important, is that, like, because of how globalized this market is, we should be thinking more about how we can utilize, allies and their resources to, like, a shared goal here. One big development, I think, in the oil industry of the past couple of years is that the Dangote refinery in Nigeria finally got online. And that's purchasing, West Texas Intermediate, so, shale, sweet crude. So, we do have capacity coming online that is able to take more of our shale patch product. And I think that's like something that should be utilized and thought about in the context of policy.
So how doesn't the dynamics we've been talking about around energy map to critical minerals?
Yeah, so I think one thing that is similar is that a lot of the dynamics that you see when it comes to investment among producers are true for a lot of commodities. True for things like copper, for lithium. They tend to be characterized by these super cycles, in some ways even more extreme. So in the shale patch, where you have a 9 to 12 month timeline from investment to production, in a lot of mining contexts, that time period can be years. And so if you think about the cycle and you don't have a lot of price certainty, there's a risk always associated with new investment that you're going to start producing and enter the market at a time when there's too much supply already on the market and you're not really going to get a great price for it. And so these are the dynamics that characterize all commodity investment, and that's the challenge we really need to work with here. There's a tendency to underinvest because, the cost of underinvesting is suboptimal profits, but the cost of overinvesting is potentially bankruptcies. And so you saw this after the big shale investment in the late 2010s, when oil prices went down, but you also saw it in lithium. So, in the late 2010s, China had basically scaled back a bunch of its EV subsidies. And so there was a huge supply glut of lithium on the market. And you saw producers from Australia and Quebec basically go into bankruptcy because they couldn't sell their product on the spot market in a way that was economical.
All right. So what's the answer?
We've put forward basically an idea to reimagine the SPR as a strategic resilience reserve. This is a piece in FT Alphaville that I wrote with Dalip Singh, who was, this was before he rejoined the administration. But we had basically put out this concept that we have these vulnerabilities in other places with other commodities, whether it's lithium, copper, steel, a whole host of things that we need for the energy transition, but also in refined products. And could we reimagine the SPR to basically address the similar vulnerabilities and disruptions in different markets?
Let's go a few levels deeper, Arnab.
Yeah, so I think it's worth stepping back and just thinking, put simply, we're trying to manufacture a lot of the tech needed to decarbonize here in the US, EVs, solar panels, small modular reactors. But to manufacture that stuff, we need a steady supply of a bunch of different commodities. Let's call them energy transition commodities. So things like lithium for EV batteries, graphite for casings for nuclear reactors, and copper for electrification. And for many of these commodities, the U.S. producers are reliant on a single source, China. They're the only ones who really have developed these markets. They've designed them in a lot of ways around their own domestic goals and policy. And so when we think about having our own manufacturing renaissance, I think basically from a risk management perspective, securing the supply chain for these commodities is like a key challenge that we have to undertake. I think if you'll indulge me to go a little bit deeper on that, this issue runs from like a market level all the way down to individual projects. And so if you think about energy transition commodity demand is rising all over the world. But the supply is controlled by China, from the raw ore, which sometimes they can control anywhere from 60 to 90%. Even more important is the refining capacity, which they often control 90% of. So they really have a lot of the supply themselves. And what they can do is they can tactically, strategically flood the market, for these commodities, driving the price down globally. And that both changes the market, but it makes it really difficult for new entrants to invest. And so if we're thinking about, domestic miners in the US, miners in Australia and Canada, it's very, very difficult for them to invest when the current price of lithium, for example, is really low. And so that, that makes it difficult. It also reduces the value of those assets, and it creates, opportunities for China to then go in and buy these distressed assets and kind of continue that domination. But aside from these market dynamics, it's the market infrastructure itself is also very, very dominated by China. So if you take something like lithium or cobalt, the only physically cleared benchmark contracts are on the Guangzhou Future Exchange, basically. There's a couple for some of them. I mean, there's ones on the LME as well. But if you're looking to hedge, that's where you have to go. And the existing cash settled contracts are also imperfect. A lot of these are, if China has a localized supply glut, it's going to impact the price of those contracts. And so if you're a lithium producer in Quebec and you've got a signed offtake agreement with Texas's, Tesla Gigafactory, the price index in your contract, which is normal practice, is very, very dependent, very kind of correlated with Chinese local supply, market supply. And so when their prices go down, the value of your contract with Texas Tesla Gigafactory has gone down. And so that makes it, very, very difficult. It puts you kind of, it can make your project more distressed. And so in the context of stockpiling, which is an answer I think a lot of people are throwing around, which is useful. It's useful because you can give producers some of the certainty they need. But it's also it's not sufficient necessarily, because what we really need is a market infrastructure as well. We need something that's more transparent.
I understand how if China is the biggest market for physical lithium, that changes in Chinese demand will affect the price of lithium. That will affect, the Quebec-Texas trade. But I don't understand why the fact that the futures market is based in China would make a difference relative to that. I mean, we have a lot of futures markets based in New York or London, but it's still China dominating it because China is the big supplier and consumer of the commodity. So can you kind of walk me through that?
Yeah, sure. I should have been a bit clearer there, which is that's the fact that the physical contracts mostly exist in China is much more of a, if you're a producer looking to hedge, that's where you have to go. And that market is not necessarily the best governed or necessarily the most reliable in terms of meeting contract obligations, let's say. So I've talked to producers who have tried to go there and use it to hedge, and they haven't had great experiences, both with, actual honoring of contracts, and you never really know whether it's, in 2019, a lot of these offtake contracts, whether they're on exchanges or not, they just weren't honored. And so a lot of companies were left holding the bag.
You had this cool riff on lessons from the Fed and this idea of crisis prevention versus crisis mitigation. Why don't you talk a little bit about that and how it applies to this case?
Zooming out, the thing we're really trying to deal with here is uncertainty, right? Uncertainty can come up in a bunch of different contexts. There's, a lot of different market failures that can happen, agency issues, asymmetric information. But you're basically dealing with a bunch of different tail risks. And what we kind of analogized to was the Fed, the Federal Reserve, when it's managing financial risks, it essentially has a toolkit that it can utilize to prevent crises and to mitigate them when they occur. we can't predict everything, obviously. But if we can build a toolkit that's capable of conducting operations in both those spaces, you can kind of build something more resilient. And so in the context of the Fed, crisis prevention looks like things like capital requirements for banks to make sure that, if there's some kind of a crisis, that they can, bring some equity to bear. Then, there's a whole host of other bank regulations, obviously. And then if you think about crisis mitigation, they have, in the past crises in 2008 and 2020, they've basically served as the lender of last resort to keep liquidity in the system. They purchase distressed assets, indirectly at least. And so in the context of commodity markets, where you have similar dynamics, basically, you need to be evaluating in real time, is there kind of enough resilience in the system so that we're getting the level of production we need that a shock is less likely? You can do that with things like forward price contracts, like put options. You can basically make sure that there's enough incentive to produce to a certain level so that we don't have a shortage. But if it does occur, or if you get the other challenge where if, you get too much production, you can have the federal government step in and just start purchasing it and serving as the buyer of last resort so that those companies that did produce don't end up going into bankruptcy. They have a place where they can, still remain viable as companies by selling their product.
So Arnab, you said that Employ America got into this originally because you were rightly concerned about the possibility of an oil shortage leading to unwelcome inflation in 21 and 22, which was right. I'm curious, are you guys next going to cook up a plan for the Fed to trade commodities futures? Is, the logical, way of doing this? Just don't let WTI go negative, that sort of thing, both sides. Is that in the cards? It seems like a not unreasonable implication of this line of thought.
Yeah, look, I think, we in our paper laid out I think there's a couple of ways this could go. One is you can cobble together a set of executive branch authorities to basically, undertake the work necessary to do this. There's some new offices that have been created. These are offices that potentially could be set up to evaluate markets in real time. There's a foundation that was established at the Department of Energy with a pretty wide ambit to support the Department of Energy's work. Could they be evaluating, what's happening in lithium and copper and saying, we need to hit this vulnerability? Possibly. And then you have, a number of different funding streams, like the Office of Clean Energy Demonstrations. You have the Loan Programs Office. Could they be undertaking activities? We put out a recent proposal for LPO to basically capitalize a special purpose vehicle that would engage in the trading we're talking about to give producers the certainty they need to go produce. That's a way where you could, it's not a perfect version of this, but it's a pretty good one, and it's one you can do with authorities that you have. Broadly, though, I'd love to see Congress, whether it's, I don't know if it's the Federal Reserve, I don't know if it's a new government corporation, which is a proposal that the Bipartisan Policy Center recently put out. Whatever that entity is, I think equipping an office with the capacity in terms of staff to evaluate these challenges and vulnerabilities in real time, and giving them the toolkit to actually act through market channels. So basically to both purchase, either directly with producers and tie it to capital commitments, or to just purchase on exchanges would be really useful. I think one thing I go back to, going back to our SPR intervention, is, what is happening now is great in terms of the fixed price contracts, but it's still a bit clunky. As you mentioned, we talked about it's sour, not sweet. It happens kind of besides the market rather than through the market. And if we're thinking about market intervening in a market to boost investment and provide some, and kind of send a price signal, if DOE could just directly be trading WTI contracts, that's a more efficient channel to the market. So equipping, the SPR office at the DOE to basically set up a trading account at CME and start trading this stuff. That to me would be a pretty useful exercise.
Right.
Yeah.
And of course, they could take delivery, unlike most people who trade those things.
Exactly. Yeah. Exactly. And they can, they can keep pushing for an incentive to build even more storage capacity potentially.
Right.
And there are new contracts being established. I think there's a new company. I mean, it's been around for a while, but there's a company called Abax that just launched their first contract last week or a couple of weeks ago. It's an LNG physically cleared contract. They're looking to really make a splash in battery metals in physical contracts, which don't really exist outside of China right now.
Pushing this as an idea is a bit of a mindset shift, right? In these agencies and even in Congress of like this, A, not being the job of government, and B, not being something that the sort of current personnel is like equipped to handle. So, we saw this like work pretty well with the CHIPS program office, but that required a new organization and 200 people coming in from outside of government who have been actively playing in these markets for their careers. Curious for your take on that, Arnab.
Yeah, I think it's always tough to. I mean, I think CHIPS has like done a great job. I think one thing I will say is, just stepping back to your point about like the political consensus around this, I think it is changing, right? And I think the fact that, I've like speak with a lot of miners and folks in the industry, like they speak to Republicans about this. I think more and more Republican, staffers I talk to and people are starting to understand, like, particularly because these are not, functioning free markets, right? Like this is a place where another country is playing a very active role. And there is an understanding that if we're going to do that, we need to, respond in kind. Is it going to look exactly the same? No. But we can leverage our skills of building financial markets to do that. So I think that consensus is changing at least a little bit, and hopefully we'll see it change more. And I'll also, I think to your point about staff capacity, when we first started doing this work, advocating for this with the SPR, there was a lot of resistance, I think, from people internally because it is very different. Like it's a totally different type of contracting. It's not something that had been done. But I think, you also do find that over time, like bureaucrats do learn how to do this stuff, and they can figure it out. And I think ideally you want to set up something that has the capacity to do this, like the Fed has, economists and people from the banking industry who know how to set up purchasing facilities in a crisis. And you want that built in probably. But there's also ways to get it done without.
The other, sorry, one thing about like the other dynamic that I think is a little underappreciated about this is like you can attract talent to do cool shit. And like this is a whole lot more exciting than whatever was happening with the Strategic Petroleum Reserve 10 years ago. And, if, where you allow people sort of room to run and be creative and thoughtful and use their energy in a, active way, you can attract a different type of talent than the ones that are currently sitting on the playing field who were looking for something different when it came to being involved in this type of stuff.
Including traders in this context. Like I've spoken to traders who are like, I've spoken to traders who lament the fact that Joe Biden is now, the greatest oil trader of all time. It's him and Mark Rich, basically, like next to each other, because I think this is something that, like, when you think about the, if you can buy into the necessity of doing this for public purpose, and that, you're not going to get, a percentage of the trade on the other end of it, but you're going to execute something really cool. Like people get excited about that.
Arnab, talking about market structure and how governments can be involved very actively for strategic commodities, I'm reminded of something I worked on a long time ago when I was an intern somewhere else, which is the farm subsidy system we have in this country. And, that's people obviously have a lot of issues with it in various ways, but nevertheless, there's a pretty strong consensus, cross-partisan consensus, that it's good to have a whole system of supports that are all different for different kinds of crops, by the way. It's not like it's just like one system, very customized for things like, whether it's peanuts or wheat or soy or whatever. And yet that seems like that's something, built up over, 90 years, right? Do you see other people sort of thinking about this commonality, like what we could learn from that, and like whether that is an appropriate analogy? Obviously, the investment cycle there in some ways is a bit different than it is for, rocks. But, it seems like there are things to learn in terms of how you use a market structure and to support kind of a steady, especially given that supply tends to be more variable there because you're worried about like weather and stuff, or you don't have to, presumably with a mine. But nevertheless, there's the idea that, hey, we don't have to worry about how much food we're going to grow. Is that something that people are looking at as well? Or what's your sense of that?
I think it's right. As a, if you take the Commodity Credit Corporation, which I think is basically the last of the government corporations established out of the New Deal that's still standing, it's because, for one thing, it's something that farmers rely on who tend to come from red districts. And so I think there's certainly a political support for it there because of that. You could imagine something like that for mining districts and for mining interests specifically. And I think one thing that's important is that like people in that context do understand that we need to be creative and have flexibility in designing different contracts for different goods, as you said. And like getting people bought into that, what happens in the lithium market is going to look very different than graphite. We did a series last year on why it's basically the federal government has an interest in establishing a liquid lithium benchmark. In the context of graphite, that's like not really true because graphite's just used like so differently basically in everything that its form and function looks so different that it doesn't make sense to have this kind of commoditized version of it. So I think that analogy is helpful for that point as well. It takes time to build these things. After we wrote the FT article, a lot of folks started to reach out and people from mining in the defense industry and commodities that are coming also to defense and with like the green energy transition. I think building that type of a coalition, though, is something that can be done. It's just that like everyone needs to see something in it for themselves, obviously. And part of that is where you get into the contractual flexibility, the financing flexibility, so that every kind of industry can get something that's appropriate for them. One of the problems that we have with like legislating these days is you get something very narrow gets constructed. It's a loan authority. Right. And loan authorities can be great. And like lending right now is helpful because the cost of capital is very, very expensive. But it's not the only thing. And it's not the thing that's going to bring a project online necessarily because you also need a demand piece to it. And so I think making sure that something is built that has that flexibility is really key.
Right. The demand piece is why the cost of capital is so expensive.
Exactly. Yeah. Yeah.
We got the inside game. We got the outside game. We've got PDFs, we've got Financial Times articles, we got blog posts, we got private memos, we got podcasts. I mean, like, how do you sort of orchestrate something like this, a relatively like bipartisan technical-ish thing into existence?
I think, orchestrating is very, very generous. We have, I think I'll say a couple things. I'm just incredibly lucky to work with amazing people. And Skanda, our executive director, I think was very, very early in identifying this as a potential problem. And like, so it helps to be first and be good and be right early on. I think the way that we approach our work here is, particularly in the inside game aspect of it, is like we do a lot of work and apply a lot of rigor to make sure that like what we're proposing is like within the realm of possibilities, both like from a legal perspective, from a policy implementation perspective, and from a political perspective. And I think you need to kind of evaluate all of those, all of those spheres and put something forward. I was very lucky. Like my first job was with Michael Bennett, who's a very thoughtful senator, and my first boss was a guy named Charlie Anderson, who's like thought through this stuff very, very deeply and technically as well. And so I was lucky to just like learn that skill from him and other people in that office. But I think when you're thinking about balancing the different pieces, the first piece of it is really getting those details right. I think everything can kind of, after that, can follow, but it needs to have some certain, some level of viability and rigor to it early on. And so our very first version of this was the weekend after, basically the weekend after Russia invaded Ukraine. Skanda and I wrote a 2-page memo that we sent to NEC and NSC, outlining the contours of the original proposal, which is different than what it ended up being. And then, realizing, we heard we got some positive responses to it. We got some more negative responses to it. We tried to then think about what does the public case look like? And to something you mentioned earlier, how can we frame this in the context of decarbonization? And that's like something is you need to think about the different stakeholders here, which is, at that time, I think the White House, when prices were $130, they probably, I think a lot of Democrats generally were like, we need to bring prices down. Like, don't worry about, the negative effects of drilling or whatever it is, or our constituencies there. But we still need to make a public case. And so we need to make that to stakeholders who might be, opponents of this. And so we need to think about how do we reach every different kind of stakeholder there that might have some agency in this. And so, we started to make that public case. And then I think over time, when we felt that they weren't being responsive enough, we got a little bit harsher. And then when they were responsive, we started to, ease up a bit and try to find ways to work through some of the details. I think you need to be nimble, is, maybe a long wind up to that simple point. But you need to be nimble.
How did you know they were going to even like acknowledge or see what you sent them?
I mean, we had relationships with the folks that we sent it to. It wasn't like just sending it into a void. I think actually before, we had, I think the Thursday or Wednesday before that, I was on a call with someone at NEC, and they happened to mention this in like passing. Like, if you guys have any good ideas on oil prices.
And yes, we do.
Yeah, I mean, and that's the point, like Skanda had been worried about this for 6 months, and I'd been like looking at different authorities to do something on for that same period of time, basically. So like we did have something in place there. And then, we were lucky that I think, the folks that we got to talk to about this, like Alex Hakez, Vivek Viswanathan, Lisa Hansman, they were all receptive to the concept. I think like no idea was off the table at that point. And so we were lucky that they were willing to do that.
I mean, I guess the sort of selfishly, like the two pieces that I don't understand really, having not been a lawyer and not spent time on the Hill, is like is this actually legal thing? And then when to be mean. Care to sort of elaborate on either of those? I mean, not everyone can like go work for Senator Bennett for a few years, right?
On the legal, it is, I would say, common practice for the White House, the executive branch, the White House to like suggest something to an agency, and for that agency to come back and say, this is unlawful. And that happens in every administration. It is not always, but sometimes it's true. But a lot of times it's like, this isn't how we do this now. And there's a conception that like the way we do this now is the only legal way to do this. It's evolved over time. Like, we're not going to do that. And so I think you need to be able to like have the confidence of saying that's not always the case. then it just goes to, how strong a legal argument you're able to craft. I mean, I'm a lawyer, and I, relish kind of the opportunity to like write a legal memo, laying this stuff out. I think generally in the context of like the spending power, that's something where the executive branch has a pretty high amount of leeway. And so, when it comes to contracting and things like that, the law is rarely like it will define and constrain what you are able to do, but it's rarely going to be a thing that says like you absolutely can't do this. If you can, and with like modern day financial contracts and lending contracts and just contracts generally, like you can usually craft something that is like flexible enough to meet your goal and also to comply with the law. I think that's like an important thing, right? I'm sure there are GCs, general counsels at the Department of Energy who are, who would disagree with my interpretations of things, but I think at least showing that you've done the work also goes a long way, because you want the principal, the champion who's pushing this forward, to at least have some of that confidence as well. And I think, to your point about like when to be mean, I think it's going to be different for everyone. I think we got a bit harsher in our tone. Skanda went and did some podcasts where he was a bit harsher. We started to, we put out a couple of blog posts where we were critical of Secretary Granholm and what she was saying publicly. I think for us, like our North Star was the policy response. And like when we felt that they weren't being responsive and they weren't being, correct in how they were applying this, like we started to get a bit harsher. And then when they were, communicating with us a bit more, and, I think I'll single out a guy at NEC who started named Neil Mahoney, who became the champion for this afterwards and really saw it through to execution. Like he was someone who was very responsive, and he helped us we helped him think through like some of the logistical challenges and how you might be able to utilize contracting flexibility to account for some of the concerns that DOE had and things like that. If you have a champion like that, they know that generally we're not there to be their cheerleader. We're there to get the policy done. And I think they understand and can keep pushing, and you can probably give them some ammo to keep pushing as well.
I think the other difference between like lobbying and this is that like resources and time is limited, and like you can't do everything, right? So as you're thinking about trading off between another one-on-one meeting with a staffer versus writing another thing, like is there a heuristic? Is it all just by feel?
Yeah, I mean, I don't know if there's a heuristic. I will say that like very quickly you run into the capacity limits of like, you run into the amplification capacity limits of one organization and, a couple of Twitter accounts like who care about this thing. And so when I think about the things that I'm like happiest to try to, where I both invest time and like I'm happiest to hand off, is some of that amplification efforts, right? And so we were really like lucky to talk to and get some like journalists who have influence to write about this stuff at important junctures. Folks like Matt Iglesias or Robinson Meyer, who really like get this policy and get the importance of it. So that's like something where I'll certainly invest more time, because I know that's going to reach an audience that is helpful for me. Whereas, I think there's like two pieces I think specifically about that you can go on our website and see. One is about managing logistical risk at the SPR, and the other is about auction design. And I would imagine like 10 people maybe read the entire reports. They are long. They took, days to write. I'm really proud of them. They're really good, I think. But the work, like that's partly to get something out there, even though no one's going to read it. It's helpful for people within the administration to say, like, this is out there now. Like, there's an argument here that is out there that is credible, that has some work behind it. So I'll put a lot of work into that, even though no one's going to read it. Yeah.
I don't know. Any advice for me on the role this platform shouldn't play in the next under a Vance presidency?
I mean, you seem to be doing a pretty good job. I'm not sure. I think, just keep socializing the stuff that you're socializing.
Well, I mean, maybe another way to ask this question is what does a Matt Yglesias do for something?
Oh yeah. Look, you mean in the context of this, like this particular policy?
And just generally, I like that level, like that layer of I don't know, top tier policy writers with mass audiences.
Yeah, I think a person like Matt Yglesias is, he's thoughtful. He can write, like he has his, an experience obviously writing about like weedsy issues like this, and can usually I know that there are people within the administration who read him and take his perspective seriously. And so from that perspective, like when he is writing about an issue you care about, like that's useful.
What Substackers are going to rise in status under JD Vance presidency?
I don't know. Maybe the Overshoot is going to be the big one. I'm not sure. I do. One thing I would say as a piece of advice is something like I wish I was. It's something I ask people more and more is like, what does your boss read?
Yeah.
And that's like there's always, I think, with policy implementation, this is actually particularly true on the Hill, which is like, there's staffers have a lot of energy. They're the ones who can get into the weeds, so they get this stuff. But there's always a risk that like you're gonna get a bad op-ed in the Wall Street Journal opinion page or something, and it's like it's done, right? And I think managing some of that tail risk is useful, and if you can get ideas out there amongst like the actual principals that are making decisions here, like that's helpful. And I think, well, one thing too, like it is helpful too to think about. I've never spoken to Brian Deese, but I think he was a champion of this SPR policy and like one who like was the principal who I think was pushing for it the most. And it helped that he had familiarity with the SPR because he was in the Obama administration. Can't remember which maybe it was Sandy, but it was one of the hurricanes where he knew at least the like mechanics of it more. Like I talked to people after we put out our proposal who are like, what is the SPR? And these are like, Congress people sometimes. So it was like, finding someone who has that experience is also helpful.
I mean, historically, the SPR in Congress is basically they would just sell oil for money to close budget gaps.
Yeah.
That's like historically mostly what the SPR got.
It's really funny, right? Because if you go back to, I think it was 2014, there was a big review of the SPR in the during the Obama administration, and that's when basically the recent set of what you're describing, these mandated sales began, and they were there to fill budget gaps, and we had a plan in 2014 to actually establish. So right now the legal capacity limit of the SPR is 1 billion barrels. But the physical capacity limit is 720 million barrels. And around 2014, there was a plan actually to establish a new site in Alabama. I can't remember the name of the site, but they canceled that, right? And then they just started selling off all the oil just to whatever piggy bank, whatever budget deal needed a piggy bank. And now I think, luckily, hopefully, more and more people are realizing that's short-sighted.
When you said a bad op-ed in the Wall Street Journal, how does the Wall Street Journal editorial page connect to whether Congress people are reading the stuff?
Getting direct time with the boss, with the actual representative or senator is like difficult. It's certainly difficult for outside people. The way you can do that is by getting into the publications that they want, that they read themselves. And then as a corollary, like if you can, if something is reported badly in one of those op-eds, that, let's say, for example, hypothetically, you're working for Marco Rubio, who does care about the press that he gets in the Wall Street Journal op-ed page, for example. He might he's done this before, where he spent a lot of time on bills and like he's been publicly supportive of them and then just changed like a day later because like one bad article came out. Like that's something you can't control for. It's not easy to get something in the Wall Street Journal, but it's something you want to be mindful of, certainly.
Circling back to the very beginning of this conversation, I guess there's that is an argument for having it, as you said, like sort of a hyper-partisan skew to what otherwise would be sort of a non-partisan piece of legislation. It's not like we're doing, we're trying to preserve, our access to graphite. That's all we have to, do it to fight the commies or whatever. So there's like ways, potentially you could argue there's a logic for that.
Yeah. I mean, look, like JD Vance was picked as VP, and I'm not gonna say here that his political instincts aren't strong because they've like served him pretty well so far.
Arnab, I had one question for you two guys. It's probably not for the podcast. Maybe I could do this publicly. Okay, so one question for you two guys. I'm sort of thinking about China Talk is basically not going to be able to like pay for my incipient child with just philanthropic support and paid Substack subscriptions. And so that requires me to look for sponsors that are not, foundations. And I guess I'm curious for both of you guys as someone, who really values the sort of independence and freedom that having a platform like this affords me, but can't live a life like Matt Iglesias, where he just writes whatever he wants and like the people, buy him a house. How should I think about this calculus? Where would you draw the lines if you were me?
I'm like highly non-judgmental about like sponsorship stuff. Like when I was in high school, like I was the kid who just didn't care that like Wilco was in Starbucks or whatever, because I just like Wilco and like I want more people to listen to their music. I feel like, I would say if your product is good, which it is, and like people care about it, and I think it's like really good that you keep doing it. So other than like ethically bad companies, like I think you should just go nuts and like get what you can to keep it going. I don't know if that's exactly what you were asking, but
no, I don't know.
I love the permission slip. I'll take it.
I don't have any strong. I mean, as you know, I don't really do the sponsorship thing. I mean, it's partly just because I feel like ads are potentially annoying. But like, I understand obviously for the podcast business model is a bit different than the sort of newsletter business model in that sense, or at least it isn't in this case. I was joking about Huawei. Presumably, you wouldn't want that kind of sponsor. That is the counter argument. The counter argument is like they're going to give you criticize you anyway. Wants to take the money.
My favorite iTunes review I've ever gotten is like Jordan. He's like a U.S. government shill. Like he gets all this money from the CIA. I'm like, fuck that, man. I wish. Like,
you wish.
Come on.
Exactly.
Or you do, but their budget's not very big, so that's
yeah.
All
right. Well, if the Chinese critical minerals commodity trading desk wants to sponsor China Talk, Jordan at ChinaTalk.media. We'll hook something up. All right, Matt, I'm like 1 month out from fatherhood. What's your advice?
All right, so there's it's a really good book later adapted to a movie called Lone Survivor, about ostensibly a true story about a Navy SEAL, part of a team that in Afghanistan, and they get ambushed, and he's the one guy who makes it out. The whole first part of the book, though, is about what it's like to train as a Navy SEAL and his experience through that. And in the sort of culmination of the training, they go through something called Hell Week. And the thing about Hell Week, that this is when like overwhelmingly most people in training drop out and they don't make it to becoming officially Navy SEAls. the thing about it is that that's challenging. It's not like they ask them to do anything harder than they've been doing. Like they've been doing all the long runs and all the other, like, chaining them down into a pool, see like how long you can hold your breath underwater. They've already had that. The thing that's hard about Hell Week is that you're doing the normal stuff, but you're just getting sleep deprived for basically the week. And they also, like, in part of their like sleep deprivation thing, they're just playing loud noises at you, sometimes including the sounds of crying babies. So what this means is, you are going to be, a Navy SEAL soon. So that's kind of cool.
Sure.
And the other thing is you can think about is if it seems really hard, a lot of other people have managed to somehow survive it. So you're in good company.
That was the best line with like baby with like the class you take before delivery or whatever, like all these like overachieving couples in their early 30s. And then the head nurse who was doing it was like, at the end of it, we're asking all these questions. She's like, you guys know teenagers have kids. Like, I have faith in you. It's going to be okay. Fair enough.
I used to
right.
teach kindergarten, and I had a couple of kids who had like close to teenage parents, which was, and they turned out fine.
How has your experience in a kindergarten classroom helped you in your policy entrepreneurship journey, Arnab?
I mean, just being able to to address every level of immaturity or maturity is helpful, especially with Congress and people in Congress, let's say. Staffers, baby staffers to, representatives and senators themselves, I guess.
We have to end this at some point, but this was a ton of fun. Thanks again, guys.
Thank you.
Thanks.
싶어 세상을 다 주겠다고 약속을 해 많은 눈들에 착하게 나에게 논란이 되어 너만 힘들게 했지 더 잃을 것도 없었는데 난 너와 비교해서 참 나는 못돼 사람이 됐고 모든 내 말들은 널 위한 거였단 핑계가 돼 이제 혼자 살기에는 버거운 집과 혼자 앉아있기 너무 커서 소파도 다 쓰지도 못하는 돈과 널 데려다 줄 만한 큰 차 못 다 가져버리고 나서 나 TV에 너와 함께 보던 영화 흘러나오다가 혼자만 옆에 없잖아 너가 하루 종일 싸우고 하는 채 잠들어도 좋아 다 괜찮으니 와서 채워주라 이 소파 혼자 네 공간이 너무 꼭 필요해 너가 어딘가 들어본 듯한 이 멜로디 떠올라 작은 기억들이 my memories 날 담은 소파는 거의 too much 기억할 순 난데 oh my god loser 어딘가 들어본 듯한 이 멜로디 떠올라 작은 기억들이 my memories 날 담은 소파는 거의 too much 기억할 순 난데 oh my god loser 오늘 것 같았던 약속을 손을 잡아주겠다던 너와 나 앞이 안 보일 때 너가 대주네 겨울에 함께 봤던 달랐지 아무리 추워도 now with you 불이 꺼져 잘 만남 I don't love you 너만 알던 때 그때 그 기억인 듯 아직도 너댔던 노래들의 가사들 뻔한 듯 했던 그 멜로디가 익숙하던 예전 그대로 고정됐던 곡 뻔하던 그 제목 초라해질까봐 난 말을 못했어